Is the bear market on the global stocks over? Can we expect rising prices now and new all-time highs, or are there still some issues? Let's have a closer look and see what we can expect. First of all, before starting with the charts, let's discuss the situation a little bit we have in the global markets currently. We still have some issues with the supply chain. Of course, we have the war situation in the Ukraine. We have the energy supply situation. We have so many issues. We also have the interest rate discussion. Of course, in the US also, the ECB is planning to raise their interest rates. We have inflation thoughts and things like this, stagflation, something like this. These are all issues we can see on the downside for the market. How can it be that the market is now rising? We are having a closer look at the chart technical situation now, not with the idea that the charts are telling us the future. The idea is that the market participants are reacting on the current situation, and we can see this in the charts. So reading the charts is not reading the future, but reading the present and deducting what it is following after this. So let's have a closer look and start with the Dow Jones. In this case, I have a Dow Jones future in mind. You can see here, this is the June contract, which is the front month currently. And you can see from the lowest point here in May, 20th of May, that we had a really strong push to the upside. And many people are expecting now, wow, this is really a good one. This is leading us to higher grounds. And maybe the bad time is over now. We can buy and expect that the market will push through the all-time high, which is roughly, let's say 37,000. And of course, also above. Is this really true? Is this possible? First of all, yes, absolutely it is possible, because when I see what we've seen here on the downside, this is from the chart technical point of view not super convincing. Yes, the market came down. Yes, this is a bad sign. However, in the way working backwards from the highest point here to the lowest point, we can see that we have on a bigger time scale setbacks overlapping, also on lower time frames, setbacks which were overlapping. So this is higher than this low here, for example. This, of course, is also. So this is indicating something. I would say that this is a movement with an ABC pattern. In between, we have an A, a B, and a C pattern here as well. And this part seems to be something what we call an ending diagonal. Ending diagonal is because this is overlapping here, and this is typically corrective pattern. So if downwards is corrective, then upwards is the best choice. Or this is an ending diagonal, which is the end of the downtrend, which is also leading us to higher ground. So you can see all these ideas are leading us to higher levels. So from that perspective, all the bearish momentum we had here is indicating that this is the wrong direction. So the bearish market seems to be the wrong one. We had a bull market on a longer time scale. You could see from 2020, March 2020, that we were pushing upwards. This seems to be a corrective pattern. This seems to be a corrective pattern here in the daily chart. This is a weekly one. So you can expect that this is maybe marking the end of the downside. And we now have the opportunity to continue to higher grounds. So this is a really good indication. So should you buy now? This channel is not giving you suggestions what you have to do and do this and I make you rich. This is not the point of these videos. It is to teach you how we as institutional traders are looking at the markets and working with what we can see here from the charts. But what I see here in the chart is really convincing for the bull side. We had all these arguments from the down movement. And now let's have a closer look to the up movement. Is this also a good one? Currently, we can see that we have some counter movements here in the 50-minute charts. For example, you can see here, smaller ones here. So you can see we have some. But if you compare same size corrective pattern, which is this and this, for example, they have some spacing in between. I take away my drawing and I will zoom in a little bit so that you can see it a little bit easier. So this size and this size is similar. And you can see this highest level here and this lowest level here. There's a spacing in between. We have some overlapping here. This one is bigger than this one, but it's smaller than this one. So what I would expect is that the next one might be something like this size. Not exactly this size. Please don't get me wrong. It's exactly the same. But as long as it's a roughly similar size like this, I can expect that this is not overlapping, not even with this one, which is not so super bad because it's a wrong measurement, wrong size. But it's not overlapping with this one, and it is not overlapping with this one in the wake. So what I would expect is something, and this is a little bit artificial currently what I'm doing, but it is something like, in a 4-hourly chart, a strong move to the upside, some break, strong move to the upside, some smaller break, small one. So next one is that kind of break, what we've seen here, and another one like that, and something like this. And this is, you can have, of course, several different ways you can draw this, because this is just guess currently. But as long as it looks like this, and what we have so far is looking really impressive for the bull side. It is looking really like an impulse move, which typically after some kind of a corrective pattern is leading us to another higher grounds here. So what I expect here is that as long as the market is moving in the same manner like we've seen here before, with a bigger correction somewhere in the near future, maybe early next week, maybe mid next week, I don't know that. But when we see this, or at the end of next week, and if we see this from that point to the highest point, which is not known yet, so drawing exactly does not make any sense because this point here is not given now. But the market typically comes back into this area here, which is Fibonacci. I can just draw it under the idea that this might be the high. This is, please don't remember these levels here, because this is just fantasy. This point is not given yet. But as long as the market is falling back like this, this would absolutely give us good new entry points when breaking through this intermediate high. So the question is, shall I buy now? Shall I wait a little bit longer? If you are a short-term trader, I can imagine you can still continue buying as long as the market on a lower time frame is giving you some corrective patterns here. Then you can use this and continue trading on the bull side here. But you have to keep in mind that somewhere this bigger correction will come into the mid of this strong market here. Take the half, a little bit above, a little bit below. Fibonacci fans may use the 38.2 level and the 61.8 level here as a raw idea where the market can reach in a corrective pattern, which is also leading us to higher ground. So if you're on a longer time frames, if you're not trading regularly, if you're just checking your positions once a week or once a month or whatever, I would wait for this setback to have another confirmation that this is not in the same strength, because sometimes you have some strong, no, you have some, I'm really sorry, you have some strong movement to the upside answered by a strong movement to the downside. So this is giving me a no entry situation. If I get some weak setback, then I can understand, oh, this is stronger than this one, so bullish is the best choice, and waiting for a trigger to enter the market. If you don't want to miss the opportunity and you're willing to risk something and you're not eager to get a really good entry point, then you may think about entering at that level here at the current moment. But you have to expect that somewhere in the near future, in the next days maybe, we can expect something like a setback like this. As long as this is looking like this, everything is okay and you should stick with your positions. And if the market, why ever, is doing something like this, you should have a stop below this level, which is roughly 30,500. Or what I normally choose, I take Fibonacci from the lowest point to the current highest point, which is the end of Friday. And in this case, I would have a stop here, which is on the current moment, it is 31,150 roughly, because in case that this corrective pattern is going that far to that point, it's not super typical that the market is continuing. It is happening regularly, but probability is way lower. So that's the reason. If we reach this point, it is more or less typical that the market is also breaking this one. So I can save this extra money here. I don't need to invest this one because chances are higher that I will lose this anyway. So if you are a lazy trader, and this is not an offense, but if you're not able to stick with the market regularly, and if you don't want to miss the opportunity, you have a chance to enter here. It is not my favorite style to enter a market because I don't like to buy on the highest point. I would normally wait for the setback whenever it comes, maybe starting from Monday, maybe starting on Wednesday or Thursday. I don't know this. But whenever it starts, then I would take this intermediate high here because I have a better entry price. I have better obvious stop levels here. And I have a typical corrective pattern here as an indication that this is strong, this is weak, and we can continue with the bull side. However, overall, my favorite is currently a bull market for the next weeks. And this may lead us to higher grounds, to higher highs than we had before anyway. This sounds a little bit funny because the situation in the markets and the geopolitical situation is a little bit difficult currently, and many people are thinking, yeah, but is this rational? No, maybe not. I don't feel so. But I'm not trying to be rational. I try to be with the flock. So if the most traders are buying, I also want to be with them. And if they stop liking the bull side, if they get panicked, then I will switch maybe to the other side or at least close my position. So take care whether your setbacks into this area are one waved, so it's only one movement down. This is not giving us a good vibe for a bull market. If you see some strong movement and some shaky to that side, expect more or less a continuation to the downside. So if this is a one waved movement, only one part sharply moving down, that's not really good. If this part is shaky or ABC into this area, then you have a good additional indication that bullish is the better way to do it. What about the S&P 500? The S&P 500, of course, is roughly in the similar situation on a lower time frame, so I don't need to stress this again. The situation here is roughly the same. Additionally, we have a really nice and some people say rock solid support here from the Fibonacci's. There's the 38.2. This box exactly is what I've drawn here on the lower time frame in the Dow Jones, but on a bigger time scale. So the market in an ABC fashion move went down. So some people are waiting for this, for triggering the March high here, end of March, for entering long. I think you can also have the same idea here on lower time frames. So expect a bullish movement to the upside, ABC to the downside for a continuation to the upside. And this is also confirmed, or not, maybe not confirmed, but giving us some extra strength that we have some support level here as well, which is indicating maybe we are done with the down movement. Only if we get something like an ABC pattern breaking to the downside. So if we get something like this, and the market is subsequently falling through this low here, then I would say, oh, dangerous. This should not happen. But this is nothing for today. I think this is maybe something for next or over next week. I'm not sure. Currently, I would expect some setback in a corrective pattern and a continuation to the upside. This is my favorite picture. And I'm, of course, having a close look whether this is coming or we have a strong sell in the next few days. The Nasdaq 100, also the future here, the Nasdaq 100 E-mini future is showing us a very nice support level here, which is also something like a cluster from the red line, which is the 50% Fibonacci retracement here from that lowest point, highest point. We also have some symmetries. Symmetry, for example, is from the first part, corrective, and the second part, so symmetry, and also the blue line, which is the measuring the counter movement and something like a Fibonacci extension. This is of course not a promise that the market needs to turn here, but this is really typical that the market at that point has a chance to turn around, and this chance seems to be in play currently by the market participants, because they were buying already and in a nearly the same fashion like we've seen with the other markets. So I see a chance that this is continuing. Please expect some corrective patterns. If you have corrective patterns to the downside, you may use them to enter the market. Switching to the European indices, taking a look at the DAX index in this case, not the future, because I have the drawing here. Some people were asking me which is better, the future or the index. Normally I have a closer look at the indices, but in this case, at the futures, because I tend to trade more intraday-ish, not always intraday-like, but sometimes intraday trades, of course, and then you need the future and to trade anyway, because the index is not tradable. It's only something you can see. But in this case, for the big picture, it's nice to have this one here. And you could see that we have broken on Friday these nice high, intermediate high. You can see we had here lower highs, lower lows, which is indicating this is a downtrend. And when breaking the May the 5th, the high of that day, then we were breaking this rule of lower lows. Lower highs in this case. So this is indicating that we have a chance that this downtrend is over. And now the bullish market is in play again, which is giving us a chance to reach roughly 16,000. And this is so close to the highest point here that I think overshooting might be a point here, so that we can overshoot the all-time high here as well. So currently I'm not in a bearish mood, and you can also see on a lower time frame that we had something. Some people are aware of this already. You can see that this movement here is really a strong one here, a shaky one to the downside. So you can see what I've drawn in the US market is also valid here on this market. If you see a strong movement and a shaky movement, you can expect that the market is continuing afterwards and giving us a good idea for the market direction, which was long, because this was the weak one, for example. So if you want to enter the market in the big picture, of course, you can enter roughly now, because we have just broken that level. We are still in the vicinity of this market here. But if you're not sure about entering, you can also wait for a setback, a corrective pattern here as well, and then use that one for the next entry, which is the situation that I prefer, or what I normally do, that I wait for something like a corrective pattern and waiting for my entry until the market is breaking through these intermediate highs. However, the picture is also quite bullish currently. So bullish seems to be a good one. Target is here. If you want to enter the market right now, keep in mind, we don't want to see lower lows anymore. So that might be a good stop at that point. And to be honest, I don't want to have a break of this level here as well. Maybe even not at this level. So I think stopping at the end of May low might be a good opportunity, which is close to 13,900, a little bit below that. So maybe this might be a good opportunity to place your stop here, or maybe a little bit above with the 78% rule I've shown you before, but you have some ideas where to stop the situation. If the market is continuing, everything is okay anyway. What about the Swiss market index? Roughly the same idea. I don't see the pictures in the same clearness. To be honest, I'm not 100% sure what this is here, because we have some overlappings on the way up. So I think the American market or the German market is a little bit better currently. However, the big picture is roughly the same. So I don't think that the Swiss market is plunging while all the other markets are going up. However, the picture here is a little bit more unclear. So if I have to pick one of these markets, or one or two of these markets, I would not choose, in this case, the Swiss market index. A market which is easy to trade normally, but in this case, I think the picture is a little bit more unclear. So the market participants don't feel, or don't give me the same feeling, or don't have the same idea or the same clearness like we've seen with the other ones. Same with the FTSE 100, which is the London index. So in this case, I also would prefer the others. The idea roughly is the same. You can see that we have a strong movement. We had a setback into this typical area, 38.2 until 61.8. So that one is the same. And this is also in an ABC fashion. So this is indicating the bullish seems to be the better option. However, that entry here, which is the typical one to enter, it is roughly at the same level here. And if I have a choice and have lower entry points like in DAX or in the other indices, I would prefer to have lower entry points because the risk-reward ratio is better in that one. So FTSE 100, I think bullish seems to be a good choice, but I would prefer the other markets. Only if you see on a lower time frame, for example, an hourly chart or whatever you pick, if you see something like a typical ABC or shaky corrective pattern to the downside, you can pick this up. So if you're an Englishman and saying, yeah, I prefer my home market, yes, of course, but I would not pick this one. I would wait for this setback back here because this is giving you a better indication that this is still the better choice to buy the market because this is a weak part of the market. So what about the Asian markets? We have the Nikkei 225 here, which is roughly in the same situation. And right in front of a good entry point, you can see this was the strong side. You can see this was the shaky side here to the downside. I was a little bit lazy while drawing, but you can see this is way weaker in strength. The downside is way weaker in strength than the upper side. So when breaking through this level here, which is the highest point early in May, 6th of May, if I'm correct, or 21st of April, if the market is breaking through these levels, I think a continuation is really the better choice. However, the intraday picture here is not super clear. I was drawing, I drew this one here. You can see this was a strong movement and I waited for some shaky movement to the downside. However, this is not super clear picture. So currently, I would prefer to see something more clearness here. So if you're a little bit doubting the current situation, maybe it's better to wait until the upper of these trigger marks here. If the market is really in a strong position, if the market is really pushing upwards to new all-time high worldwide, the global stock market, if this really is the case, it is not so much a difference whether you enter here or here. You would expect that this corrective pattern here is coming to an end. We see some overshooting 31,000 or maybe even way above this. To be honest, my fundamental idea of the market is giving me some doubts. I'm not super convinced that this will happen. However, chart technically, currently the market participants are aiming for higher markets. That's what I can see from their behavior, what they are doing. And I'm never walking against the market. This is really important. My own ideas are not so important than what the market is doing. And the market currently is showing strength to the upside. So do I. So in this case, it's also some long situation, but a little bit unclear what the entry point is. Maybe you can see them within the week or within my next time when I have a closer look at the markets. You know, I'm doing these videos every week, but every second week on the same issues. So currently it's the global stock market. Next week it will be the commodities like gold, like the energy market and maybe something else, and the bitcoins and whatever. So please subscribe this channel so that you don't miss the next information I give you on these markets. Let's stick a little bit with the Asian markets. Let's have a closer look at the Hang Seng. Also the Hang Seng is giving me a better indication for the bullish side, but to be honest, this picture is not as clear as we could see in the American market, for example, or the German DAX or the other European ones. You could see that this is coming down, but the weakness, you can see it easily also by the angle. You can see this was the angle for raising market, the line here, from the lowest point to the highest point. And this was the lowest point currently. So this is the angle for the down market. And I overdid a little bit. So it is To be honest, it's more like this. And you could see there's a difference. And you could also see from the pattern, this is way stronger than this movement with this ABC looking lookalike movement here. And also on a lower time frame here in the intraday chart, on a 4-hourly chart, you could see that this one seems to be, yeah, does it really? To be honest, that's the part of weakness I can see in the Hang Seng, because this one is not really convincing me, because this point is lower than this point. So this seems a little bit corrective-like. So currently, I would not go long in the Hang Seng. I would wait a little bit longer. Maybe on the 15-minute chart or lower time frames, you can easily trade this, but the biggest picture is unclear. The same with the Shanghai Composite Index. I'm not super convinced what I see here. Yes, we have a bullish direction, but you can also see that we have a lot of counter moves which were overlapping. So this is giving me more questions than answers. So this is indicating me, stay away from me. This is maybe not currently the best choice. If you're really willing to invest in the Shanghai Composite and you say, yeah, this is my market, I definitely need to, or I want to, then at least wait for a counter movement and be aware that this counter movements must be weaker than this one. This is already weak. The up movement is already weak. But if you really want to buy this market, wait that this part is even weaker, is even more shaky, more or slower moving into this direction, so that you can say, okay, this is weak, but this is even weaker, so I'm staying with the better side, which is then maybe the upside. Currently, I don't see this, so that's the reason why I would not trade this market at the very moment. So I hope you can make the best out of these ideas, of this information. This is not meant to be a trading advice and saying, hey, I make you rich with one trade. No, that's not the job of a trader. It is to read what the other market participants are doing, not to guess the future, but to be prepared what the others are doing and saying, I'm with you, and maybe a little bit ahead of the mass of the people. So I hope this is helping you, crossing my fingers for you. Wishing you all the best for the next week. Seeing you. Don't forget to subscribe to not miss the next video. Bye-bye.